Money laundering is a huge issue, and International Monetary Fund has estimated that it could account for 5% global gross product. Therefore, anti-money laundering matters to us. It is something we have to deal with whenever we take on a client or receive money. So each firm have money laundering compliance officer or money laundering reporting officer, but it's not those Malcos or Melrose or the partners responsible for all the staff in our firm who dealing with a client, who touching clients' money should be aware or familiar with the requirements of AML regulations. But one difficulty with AML is that the legislation provides guidance, but not specific steps on what exactly to do, i.e. how we comply with regulation. Therefore, for each firm, I believe all have their own requirements. For example, uncheck the source of funds for the client. There's not seem to be one thing can fit it all. So that's why today we have 3 top speakers from SRA. They will update us on the legislation. They will provide the guidance on the principle. They will tell us how they assess us as a regulator, how well we do our AML compliance, and they will show us the non-compliance, the action have been taken for the examples. And another valuable part for today's talk will be our Q&A, where you can have all your difficult questions put to our 3 speakers today and get our answer, especially I think dealing with money and clients from China with all the foreign currency restrictions is really challenging. So you can have all your questions prepared, and then we'll be forward to in the chat, then we can get the speaker to answer them in the end. Finally, I would like to, on behalf of the UK Society of Chinese Lawyers, to thank you, Libby, for help organizing the event, Stephanie, and thanks Mark, Zoe, and Christian for your time and expertise providing the talk today, and welcome the speakers for today's talk. Thank you.
Okay, hello everyone, good evening. Thank you, Dr. Zhu, and thank you, Madam Chong, for your kind words and for your introduction. My name is Roxana Mihir, and I am speaking on behalf of the British-Ghanaian Lawyers Union. Who are we, may you ask? We are the British-Ghanaian Lawyers Union, and we are an organization created to inspire, connect, and uplift our members. So our focus is on promoting Africans in the diaspora and within Africa in their career as legal professionals. Who are we? We are 1,200 legal professionals based in Ghana and the United Kingdom. We comprise of solicitors in private practice, barristers in commercial practice and non-commercial fields. We are also practitioners in legal and compliance areas, and we're also students and graduates of law. You may ask, what is our aim? Our aim is to build professional networks, connect members across 2 jurisdictions, highlight cross-border business opportunities, and also to connect Black solicitors across 2 jurisdictions and to bring us together with more opportunities for Black solicitors in England and Ghana. Thank you very much for your audience.
Thank you both to Dr. Zhu and also Roxanne. Let us all welcome the first speaker from the SRA, Mr. Mark Boyle, AML Policy Manager from the SRA.
Thank you, Lily. And just to say at the top, thank you to our host, the UK Society of Chinese Lawyers, and also thanks to the British-Ghanaian Lawyers Union also. So I'm going to give a bit of background about what I do and my areas of focus, including guidance and a few other pieces as well. But just to kind of give you an idea of the kind of structure of what we're going to be talking about today. The Solicitors Regulation Authority is the largest AML supervisor in the legal sector in the UK. We have a dedicated AML team, which has within it kind of 3 sub-teams. And I like to describe it thusly, that the policy team sees AML as it should be. We talk about guidance, we talk about what one should do in this or that circumstance. Then there's the proactive team. The proactive team mainly deals with going out to firms and actually inspecting what they're doing, looking at their files, and interviewing fee earners. And I like to say that they see AML as it is, for good or bad, warts and all. And then there's also the team that is led by Christian, which is the AML investigations team. And potentially, if you're dealing with Christian's team, something has gone wrong, and they see AML how it shouldn't be. So I think we're going to kind of approach AML from those 3 different perspectives today, and in that order. So moving on to the next slide. Just as a very brief kind of header for those of you who are maybe slightly unfamiliar with the AML regulations. Oh, sorry, actually, I'm going to start with just kind of a general message about the importance of AML. So perhaps, certainly, unfortunately, AML can often be cast as a sort of a tick box administrative exercise that needs to be done in terms of client onboarding. I think it is possible, all too easy, in fact, for us all to forget the importance of what AML is actually trying to address, which is actually trying to remove the incentives of acquisitive crime. And when I say acquisitive crime, I mean, when you think about it, most crime is actually there for generating benefit for the criminal, whether that be human trafficking, the drugs trade, take your pick of all the terrible things that people do. And the idea is that when somebody commits these crimes, the incentive is for them to create profit, and then for that profit to then be washed, laundered, and put into the general financial system. And the aim of money laundering is to actually kind of work back in that way, try to limit the opportunities for people to enter their ill-gotten gains into the financial system, and thereby kind of diminish that incentive. So the victims of kind of AML, of the kind of predicate crimes, are victims indeed. The crime is very serious and the suffering is very real. Just a couple of statistics, just to throw at you while we're on the topic. There's estimated to be 4,500 organised crime groups in the UK, 181,000 offenders linked to organised crime, and the cost to the UK is estimated to be £37 billion per year. Most of those numbers come from the National Crime Agency, who are the organisation with the best overview of actually what's happening in the UK. Of course, there's also a massive impact on prosperity in the UK, reputational risk of the legal sector, etc. as well. So for these many reasons, it's a huge focus for the SRA. And as I say, we have a well-developed team totally dedicated to AML within the Solicitors Regulation Authority. I'll also say, I've said AML means anti-money laundering. AML is filled with acronyms. So if I do lapse into AML language, which is acronym heavy, then I'll try to address that and explain any acronym I use. Going forward to the key legislation, this may be very familiar, hopefully is very familiar to everybody. But the first main piece to know about is the 2017 money laundering regulations. These were updated in 2019, and that came into force in 2020. So they're ever changing, ever evolving. But within this sets down most of the tenets of what anybody would be familiar with in terms of AML. So risk assessment for the firm, risk assessment for the client or for the matter, training, customer due diligence, etc. All of this is laid down in these regulations. The other really important kind of element to mention is that actually a lot of the money laundering offences aren't based in that legislation. They're actually based in the Proceeds of Crime Act, also known as POCA, which came in 2002, and again, updated many times since. Within POCA, it sets down kind of both the key money laundering offences, but it also sets down the mechanism by which firms need to inform the National Crime Agency, which is the UK FIU Financial Investigative Unit, of any suspicious activity that they encounter in their work. So if you suspect you're encountering the proceeds of crime, it's a suspicious activity report, or a SAR, that you submit to the NCA. And it's this legislation that sets all that down. And then this is the Terrorism Act as well, which sets out a rather kind of parallel system in cases where you suspect that money might be used for the financing of terrorism. So moving on, I mentioned at the top how guidance is a big focus for my work. And the biggest single piece of AML guidance for the legal sector is known as LSAG, again, it's an acronym that stands for the Legal Sector Affinity Group, but in practice it means all of the legal sector regulators and representative bodies who come together and write this guidance, and then it is signed off by Treasury. The most recent iteration of the LSAG was a large part of my working life for the last kind of year and a half. It is a very large piece of guidance, and it is also a very significant update on previous guidance as well. I believe the previous LSAG was released in perhaps 2018. Just a couple of things to highlight in terms of kind of the nature of the change. This was not a sort of, go through the guidance, well, this changed, tweak that, this changed, tweak that, just to kind of adjust it for the new legislation that came in 2020. It was a huge comprehensive review. To give an example, the risk assessment section, which is section 5, we pretty much kind of started with a blank page for that, in part because we and the other supervisors have done a huge amount of work in this space. So our view of risk and our view of what works and does not work in AML has changed considerably in that time. So we wanted to make sure that our expectations, our current expectations, were clearly set out for the profession. Some sections were totally reviewed, some were just entirely new. Section 7 is on technology, and there wasn't really any consideration of how firms could or should be using technology in the previous guidance. So this is something we're really keen to address. Helpfully, the Financial Action Task Force, which is the global standard setter in this area, released guidance about use of technology in March, I believe, of 2020, which we leaned on pretty heavily. And is a useful document. It's quite a dense document. We tried to make it a bit more plain spoken in our guidance, and I'll go into that a bit more later. Another big thing is I'd encountered quite a lot in kind of one-to-one interactions. A solicitor would say, well, the SRA has said this, and this. Where does this come from? This doesn't come from the regulations. How can I comply with this? And often there would be cases of kind of a bit of misunderstanding, if I'm honest, whereby we might have suggested a way that somebody could comply with the regulations, but we're not just directly quoting from the regulations. And there would be, you could say that it's the nature of lawyers to kind of look for absolute clarity on points from a legal perspective, and sometimes guidance doesn't quite fit into that. So what we wanted to do is kind of reframe a lot of what was in this guidance, so that this was clearer along the lines of a must, a should, or a may. A must is essentially a paraphrasing or a rephrasing of what's in legislation, so it is an absolute requirement. Then there are shoulds, where the supervisors are saying, this is our expectation of you. This is what we think you should be doing in order to comply with your duties. It is possible to deviate from a should, but we would say that if you're going to do that, you should document very clearly why you've made that decision, so that if we do ask you about it in the future, we can you can substantiate why you made that decision. And then there's also pieces in there which are simply mays. We're just saying this is a suggestion. It may not be the best way to address this. There may be better ways to address this, but we've seen this happen in other firms. They've found it useful. Maybe you will find it useful as well. So it's kind of a without prejudice piece of advice. Yeah, I think that kind of addresses the overarching changes in this piece of guidance. Moving on to kind of what we decided to call the compliance principles in the next slide. So this is one of several practical things. I'm not going to go through them all today because we don't unfortunately have enough time. But one of the key things we thought would be useful in this guidance is to clearly state in summarized terms exactly what are the things you need to hit in order to have a chance of being generally compliant as a firm. And it includes and addresses things like having a money laundering reporting officer, having a money laundering compliance officer, having the internal controls of screening your staff, training your staff, etc. And then key things obviously like having policies, controls, procedures, doing customer due diligence, source of funds, source of wealth, all of the main AML tenets. And we don't really intend it to be used as a checklist, because by and large AML and checklists don't necessarily go together all that well. But it is intended as a sort of a brief summary guide early on in the document. And then it's kind of reiterated as you go through the document as well. What are the key tenets that you need to address? And then how you address them is then kind of the rest of that part 1 guidance. So moving on to the next slide, I did mention that technology was a totally new section. I think it's probably worthwhile just highlighting it here. We didn't realize when we started writing it how even more relevant this would become with COVID and with the inability to meet clients face to face. But I think the watchword when it comes to technology is trying to kind of simplify things, because obviously technology is there to do something that perhaps you cannot do as a practitioner. It might be to some degree beyond your understanding. It's not your area of expertise. But I think that, and this is in line with the FATF guidance, a good way to break it down is into inputs, processes, and outputs. Any system in the world can be broken down to those three things. There's an old axiom in kind of computer language and data processing, which is a bit impolite, so forgive me, but it's garbage in, garbage out. And that's a really good thing to consider when you think about inputs. No matter what the platform is, if the information you're putting in is wrong, is inappropriate to the system, is not kind of feeding in what is needed to do the work, well, the answer is not going to be right either, is it? So that's a really important thing to ensure that you're feeding in the correct information, and that kind of starting point, you're starting from the best possible position. Then there's processes, and that's really kind of understanding what's happening within the black box. If the technology you're using, if the provider can't explain it to you, if you can't explain it to somebody else, I would suggest you're maybe in a spot of bother there, because it's really important to actually understand what's happening, because ultimately it's your firm that is culpable for whatever the technology does. And then outputs. Actually, I'll mention one kind of apocryphal example. Was a firm that there was a sanctions checking element to their system, and they fed in a bunch of names of known terrorists, ISIS members, etc. into it, and it gave them all a clean bill of health. The problem was that the system was kind of reading off the sanctions list every 6 months or 12 months or something like that. And the names had relatively recently been added, let's say kind of 3 months ago. But the internal mechanics of the system, because it only kind of took a refresh every 6 months or 12 months, meant that it was blind to that. So that's just an example of how kind of understanding the processes can help you avoid sticky situations like that. And then kind of two other questions, I think. Sorry, the last point is obviously outputs. Outputs very important. Is it giving you something like go, no go, green light, red light, something like that? I would say that is potentially problematic on the basis that it's not giving you the contextual information that you and potentially your fee earners need to be taking into account when looking at the client in the longer term. So when engaging in ongoing monitoring and actually just kind of understanding how the risks are changing in a dynamic way. So that's the important thing there. Last two things to mention in this is that often these services are provided in a sort of a tier basis, often with costs accumulating with the levels of service. So hypothetically, if something was split into a bronze, silver, gold, as the Olympics are on, that's kind of what's sticking with me there. But let's say you look at what's offered by the silver service and you think, okay, that's maybe appropriate for simplified due diligence, and then you kind of look at the gold level and you think, okay, that's maybe what we need for across the board. And it might be that the technology service doesn't provide you everything you need. It might be another technology service you need to bring to supplement it, or it might be processes within your firm that you might actually need to add on top of that gold level in order to do the full suite of checks you're intending to do on enhanced due diligence clients. So it's really just kind of understanding what the demarcations are, what are the levels, and then matching that to what's appropriate for your firm. And then the last thing to mention on technology is that there is a proliferation of standards in this area. So, it's not like there's kind of all of these different providers. There's no way to kind of figure out what's good, what's bad. Increasingly so, that's a lot easier. Digital Culture, Media and Sport, as in the Department of Digital Culture, Media and Sport, have released a Good Practice Guide 45, which is a standard in this area for identification. And also Land Registry have released a sort of a safe harbor standard as well. So these are things worth looking at and kind of checking whether these providers meet them. Similarly, I believe there's ISO standards, European standards as well. So there's actually almost too many standards to check, and it's kind of trying to figure out exactly what's being provided by the technology platform is the main thing. So I'm drawing to the close of my section there. I'm trying to go through quite quickly, so we have quite a few minutes for questions at the end. Last slide from me is just to highlight that if AML is something that matters to you, and the AML regime of the UK is something that you feel strongly about, there's actually never been a better time to have your say about this, because the HM Treasury has released 2 consultations. One of them is about quite specific changes to the legislation. I would say quite limited changes to the legislation. More likely to be of interest is a call for evidence they've released. So it's basically tell us what you think of the AML regime. What's good, what's bad, what needs to change to make it better. That's something I think we're quite excited about as an organization, because we have a lot of opinions about this. This is AML is all I do, so I have a lot of very strong opinions about it, as my colleagues will attest. Other things to highlight in the space include there's a consultation on digital identity, which I think is being run again by Digital Culture, Media and Sport. Interesting proposals in there, potentially a role for the Information Commissioner's Office to be a regulator in that space, which I think is pretty interesting. And then there's another consultation due later in the year from the Home Office, and this is about what I mentioned, the kind of the Proceeds of Crime Act, which is kind of setting out what the offences are, and also a lot to do with the suspicious activity reporting regime as well. So I'm going to draw my piece to a close there. Thank you all for your attention, and look forward to answering your questions later on.
Thanks, Mark. And thank you all for having us and showing an interest in this important topic. I was going to dive straight in, Lily, unless there was something you wanted to say.
No, that's all right. Please carry on.
Just conscious of time.
Yeah, of course.
Thank you. So yes, I really appreciate you taking the time to sort of listen to us and discuss this topic. I'm Zoe Allen Robinson. I'm also a solicitor. I've previously worked in private practice and in-house at the SRA, and now manage the proactive team. So I thought it might be helpful to start with who we are as a team, what we do and why, and then take you through some of the key requirements in the regulations, and hopefully give some practical guidance that you can apply in your roles. So just moving on to the next slide, please. So we are a team of both lawyers and non-lawyers. So we have solicitors, a barrister, foreign qualified lawyer in the team, and non-lawyers that bring invaluable experience from the finance industry, some of the large banks, also compliance consultancy experience, regulatory and investigations experience, both at the SRA and other regulators, and also have people in the team that have previously worked in compliance roles at law firms, which that diversity really helps with our approach. And we're required under the regulations to supervise this work and to assess law firms' compliance with the regulations. And we do this through a number of different tools that you may or may not be aware of. So we conduct desk-based reviews, visits, and also do ad hoc exercises. So when the team was first created a couple of years ago, the first thing we did was call in 400 firm-wide risk assessments, which was a new requirement under the 2017 regulations, and really helped us understand what was out there and be able to put out guidance and a template that you might have seen. And we're finding a big part of our work is the supervision. So taking the time once we've done the visit or the desk-based review to engage with the firms and provide bespoke guidance. We really do acknowledge that this work coming into your firm or asking for a lot of documents and files causes disruption. And we appreciate that takes people away from the earning time. And there's obviously challenges recently with some of this work being done remotely. But we've seen that nearly all firms have been really engaged in the process and flexible. And we also understand that firms do find this exercise beneficial too. So that's really good for us to hear. And we're keen to make sure that it is beneficial to the firms we see by providing transparent guidance and assistance for firms to bring them back into compliance where appropriate and we've noticed issues. So just moving on to talk a bit more about those tools. So with all of our work actually now, it is a rolling program. So your firm may well have been or could be contacted in the future. So With the desk-based reviews, we will ask to see your policies, controls and procedures, and other key documents. And we'll also want to see a sample of files to check the adequacy of the documents, and then also the effectiveness. How are they being applied on the ground? So with the file reviews, we're looking for risk assessments to be present on individual matters, assessing whether appropriate level of customer due diligence has been done, and when necessary, looking that you've evidenced the source of the funds and potentially the source of wealth in a transaction. We'll also be looking for ongoing monitoring depending on the age of that file. For example, we'll be looking for point in time monitoring. Has that been done to check that the customer due diligence documents are up to date? But more importantly, whether if the circumstances have changed, for example, the parties have changed, the asset in question in a transaction, value, or the source of the funds, has this been identified by the fee earner, and the risk and level of due diligence reviewed as a result? And so just moving on to visits now. So in terms of what to expect if we were visiting you, it's the same starting point as a desk-based review, but it's more extensive in terms of the records we'd ask for, so training and screening records. We also conduct interviews with the money laundering compliance officer and reporting officer, and get to see in their own words what should be happening at their firm and their knowledge on the topic. But we also like to speak with some fee earners as well to see their understanding and what is happening on the ground. And in terms of what we do as a result after the visit, so we could just simply issue guidance if the firm's compliant. We could engage with them and ask for revised documents such as revisions to the firm-wide risk assessment, have some follow-up questions. Where we've noticed potentially multiple issues that need rectifying, we may put a firm on a compliance plan, which is not a sanction or a control. It's just a helpful tool that sets out the expectations, what needs to be done, why and by when. And in terms of, you can see some figures there from our last published trends of visits. Again, this is an ongoing programme, so these visits were done across 2019 and 2020, and 2/3 of firms, roughly thereabouts, required follow-up engagement, and you can see 9 firms were referred. So for those of you that have been watching what we do in the AML space for some years, you'll see that's quite a shift. Before that, there may have been a high number of referrals. We didn't supervise as much in this area. So what we've tried to do is really shift our focus where we can see firms are trying to comply, assist them in that process, but where we have identified significant systemic concerns, there are a small proportion of firms that are referred, which Christian will sort of give his take on some of the things he's seeing. But to give you an idea from this project, that this may have been firms where at least half of the files showed serious issues, such as a lack of due diligence or matter risk assessments altogether, or where firms didn't have a compliance framework in place, such as policies, controls and procedures, or another example is where a money laundering compliance officer didn't appear to understand their obligations and wasn't carrying out their role properly. So just to sort of give you a flavour of the areas that we identify from that visits and what we're seeing, and areas that firms are struggling with, so hopefully help you with that. I'm going to go on to speak about these ones on screen. So if we get straight on to audit, next slide, please. Thank you. So under Regulation 21, depending on the size and nature of your firm, you may be required to undertake an independent audit. This is different to the requirement in Regulation 19, which is for all firms that you have to monitor compliance with your policies, controls and procedures, so do bear that in mind. In terms of an independent audit, well, when you need to do one, so size and nature, you'll see there we said most firms will need to do one. If you're a very small firm, it may not be necessary, but to make that decision, do think about things like, do we have multiple offices? Do we do any high risk work or act for high risk clients or in high risk matters? Do we have sufficient oversight? So if you're a firm that has, your management level, and then you have other people managing individuals and overseeing the work, it may be that disconnect suggests that you need somebody to review what's going on. So most firms would tend to need to do one, but independent doesn't mean external or necessarily incurring a cost for that, although you may choose to do that. It can be that someone in the firm can carry out this role. And when undertaking an audit, essentially you're checking that your firm has complied with the requirements in the regulations, the policies meet the requirements in Regulation 19, for example. Are they adequate? Do we have adequate policies? And are they being effectively applied on the ground? So that's where we would expect to see file reviews. Some firms also interview fee earners to assess the effectiveness. And other ingredients of an audit that must be present: it must produce recommendations, and those recommendations and any corrective action must then be monitored. So just moving on to the next slide, this gives you a flavour. It covers some of the things I've discussed, but what we're looking for and what could be done better. Do be mindful that if you have certain reviews for quality mark schemes, do just check whether that actually fulfills the requirements of Regulation 21, or whether you need something standalone that produces recommendations and is monitored and really focuses on AML. And whatever you do, make sure you keep written records of what you've done and when, and that it doesn't just look at the policies, controls and procedures. It is testing their effectiveness, such as by file reviews, and any recommendations that are made, ensure that you are implementing them in a timely way. So just moving on to screening. So in terms of screening, this requirement is for all relevant employees, and definition of relevant employee under the regulation is very, very wide. So it talks about staff members that could possibly identify money laundering or prevent it. So depending on your firm setup, if you've got receptionists or support staff that are having that client contact that could be told some information that would be concerning, then you could potentially need to apply who you screen on that very wide basis. In terms of what you need to look for, you need to check that your staff have the requisite skills, knowledge and expertise. So, there are no cost options here, things like obtaining references, appraisals that you might already do, checking their qualifications and certificates. And then conduct and integrity, again, a no cost option would be to come to us and use our solicitors register tool or our contact centre to check that who you're employing hasn't got any regulatory findings with us recorded against them. And just to note, that's not just solicitors, we do have powers against unqualified people as well. And these checks have to be done before and also during employment. So you'll need to think about the appropriate frequency and level of checks for your staff that have been with you for some time. And just moving on to the next slide, firing through these, but it gives you a bit more information on sort of good and bad in terms of screening. So the regulations, and we as a regulator and in our guidance, we're not saying you must do criminal DBS checks on all of your staff, but that is something to think about, taking that risk-based approach. Some firms may determine we're going to just do those checks on our finance staff, for example, or certain departments. So using a mixture of methods may be a successful way. I mean, we have, although it's rare, it does happen. So staff have infiltrated law firms and laundered money through people's firms. So it's really that balance of cost option and risk that is your decision to make. So just write that down, what you choose to do. And similarly, in terms of what we're seeing that could be done better, firms only screening at appointment and not doing it on an ongoing basis or maintaining records. And similarly, some larger firms, this may be seen as sort of HR's thing to deal with. So making sure if you're the money laundering compliance officer, you understand what checks are being done and if there's any gaps that need to be filled. So moving on to matter risk assessments. So this is a really important requirement, I would say, in terms of the impact. So you will have your firm-wide risk assessment, which sets your tolerance, and then a matter risk assessment is what you do on each individual matter as required under Regulation 28. And I say it's important because that sets what level of customer due diligence that you do in terms of how you rate the risk in an individual matter. So as I say, it must reflect the firm-wide risk assessment. So whatever you've set as your tolerance, for example, if you've said that a certain area of work or type of client is high risk, then if you're using a form to do matter risk assessments, make sure that that's reflective of your risk appetite. And it also must reflect the requirements in the regulations that are mandatory to require enhanced due diligence, most obviously in politically exposed persons, but there are other circumstances that are wider than that that would require enhanced due diligence, such as under Regulation 33. And when you're conducting that matter risk assessment, you must understand the matter, the value and the regularity and duration. And this risk assessment then forms the basis of how often you will revisit that for your ongoing monitoring to check that risk level is correct. So just moving again onto the table here, and just bear with me. So this covers some of the things that I've mentioned. So making sure that it reflects not only your Regulation 18 risk assessment, but also what the regs say. It's not sufficient to not record risk assessments. This is an area, if we see that that's across the board and causing an impact in terms of the due diligence you've applied, that could result in a referral. So I would stress the importance of this. And also in some larger firms that have a compliance function, we saw that fee earners couldn't access these documents. And that's going to be really prohibitive in terms of them being able to identify anything in terms of the ongoing monitoring that could lead to a change in risk level. And then moving on to something that was mentioned earlier, and one of what we recognise as one of the more challenging areas of the regulations, which is the next slide on source of funds. So in the latest guidance, this is described as the funds that are being used to fund this specific transaction. So do bear that in mind. If you understand more widely about the person's wealth, you may still need to do checks on the source of the funds for this particular transaction where necessary. And it's a key component of assessing risk. If you don't know where the money's coming from, how can you understand the transaction as required under Regulation 28 for your general customer due diligence, let alone whether this is a higher risk or where necessary? And another thing to flag when thinking about when you apply source of funds checks at your firm and where you set your risk tolerance is also the risk of, if you're not doing this on any matters or very few matters, are you putting yourself and your firm at risk of committing an offence under the Proceeds of Crime Act if you allow criminal funds to pass through your account because they've not been checked? So it is a very useful way to protect yourself from any possible criminal sanctions. So in terms of the next slide and what we're looking for and trying to give a bit of practical guidance around source of funds and what could be done better. This is the origin of the funds for that matter. So it's not evidence of funds, it's source. So if you've got a sort of tick box thing where you're asking your fee earners to obtain bank statements, for example, but they're not actually looking at what that says. If this is a bank statement that shows the money exists, so it's got £2 million in there, but it doesn't show any payments in or out or how that's come about. If it's a savings account, for example, we're not seeing the source of those funds. So in a bank statement that shows you, for example, a regular salary coming in and the amount looks to equate appropriately to that salary, then that is showing you the origins. The money has been saved from their salary. So it's really important that when you determine source of funds checks are required, that it is the origins of the funds and not just that it exists. And some firms have used their matter risk assessment to ask the client, what is your occupation? And then that's very helpful when you look at the source of funds on a matter, because if you're aware that their occupation is more associated with a lower level salary, yet there are very large sums coming into their account, then that is an indicator. I need to look at source of wealth now, because what I'm seeing doesn't equate to what I think their wealth is, and I need to ask some more questions. So yeah, the key messages here about making sure you're reading what you're seeing. You know, you might find the first document you've been sent is sufficient, or from what you know about the client or what you can obtain online is right. We're not saying you need to obtain loads of documents each and every time, but do read them and understand them and make sure your fee earners are doing that, and you're not making assumptions about the client's source of funds because of what you know about the client, or if you've been told the partner knows them personally, making sure that you feel sufficiently protected. And so just finishing off on the last two slides with some other tips that I thought might be helpful. So do think about who you're appointing as your money laundering reporting officer and compliance officer. Think about if they do need to implement change, have they got a sufficient route into the board? You know, with the compliance officer, they need to be a member of the board. Can they affect change? Do they have the relevant skills and knowledge to do it? We recognise this does take time to do this properly. Also, we're trying to be helpful in this area, so do check out the guidance on our website or the legal sector affinity group guidance. And if there is anything you feel you need that you're not getting, do reach out to our professional ethics team who are in talks with us as well, and we can look at putting more out there or more webinars. And it's really important to create that culture of compliance, as Mark started with. You know, this is really important. And although we appreciate it takes time, it's costly, and this is the law, not the SRA's requirements, but making sure that people understand the importance of what they're doing, and it's obviously going to save you money in the long run if you get it right. And training, you know, if you do identify issues, do some bespoke training, share emails around the team, making sure is this right for my firm and our processes and policies. We know there's some great off-the-shelf providers, but does that tell a fee earner what to do and what documents to get, for example, in a particular matter? And then next slide, please. Just a few more quick tips. If you are sort of a high street firm or do lots of different areas of work, some of which are in or out of scope, do be mindful that if you've got a client coming in on a matter that's out of scope, so you've not done any customer due diligence, if they then instruct you to buy a house, making sure you recognise that passporting risk and that they wouldn't be able to be onboarded and work start without those checks being done. As Mark mentioned earlier, technology can be really helpful in terms of electronic providers. It's certainly not mandatory, and do make sure if you're using it, you understand what it can do. Does it just identify that that person you're speaking with exists, or is it verifying that they are the person they say they are, for example? Is it checking Sanctions, Interpol, the different sources that we know are out there? And two very sort of basic ones, but so important, you know, does it make sense? Making sure your fee earners are thinking about that. Does this make sense? And if I've made a decision, have I written down why, just in case you are one of the firms selected by us for a review or a visit. So I hope I didn't speak too quickly through that, and obviously welcome any questions on what I've discussed after Christian's part.
Hi there. I'll crack on straight away because we're short for time and we want to get through some questions. Yep, next slide, please, Jackie. So thanks to Lily and both groups who've invited us. Very quickly, if your firm ends up having a file open in my team, we're potentially looking into a breach of the money laundering regulations, and that could lead to misconduct and the finding of sanctions. So realistically, you don't want to be receiving a letter from me or my team. Because my team is reactive, so we look at things that have already happened normally. Sometimes we get live cases, but normally it's something that happened a year, 2-3 years ago. We are bringing allegations in relation to things that happened pre-June 2017 and post-June 2017. So we could be looking at the relevant regulations that were enforced at the time, whether that be the 2007 or the 2017 regulations. We don't really go back any further than that because normally the lack of documentation pre-2007 is just not there. So some of the investigations within my team are where firms just simply don't have the framework in place. They don't have Regulation 18 risk assessments. They don't have Regulation 19 policies, controls and procedures. They're not training their staff properly. They don't do independent audits. Other cases within the team are where we're looking at individual transactions. And so it's been identified that something happened here or something didn't happen there, and there could have been potential money laundering taking place because of insufficient checks. And so we will look at those individual matters and see what actually happened on them. Next slide, Jackie, please. Obviously, some of our investigations have a combination of both, and I'll come on to one of the examples towards the end of this. It's rare that we investigate a case where money laundering has actually happened, but we do receive information from law enforcement agencies. We do receive information from the courts where there are convictions or arrests for money laundering. And obviously, if we uncover money laundering, we are duty bound to pass on that information to the relevant authorities as well, so that criminal convictions may follow. We're not conducting a criminal investigation within my team. We're seeing whether or not somebody has complied with the regulations, and if not, is that serious enough to be considered misconduct that could lead to a regulatory sanction. Next slide, please. So where does my team get its work from? Law enforcement agencies, Her Majesty's Revenue and Customs, the Land Registry if they spot dodgy transactions, local authorities, courts, Serious Fraud Office, Financial Conduct Authority, international organizations such as Transparency International. So they do their digging on open source research sites, and they would say, this doesn't look right, this doesn't look right. And if we think there's something in it, we may look into it. Firms have a duty to self-report potential misconduct to us. So if they identify things that have gone wrong within their firm, they have to notify us and say, we've dropped the ball on this one. We can see when we've reviewed this file, all the checks weren't done. We had no idea where this money was coming from for this transaction. And so firms notify themselves to us. Some firms report themselves, one firm will report another firm and they'll say, we've been trying to get information out of this firm. We've been asking, have they satisfied due diligence in the transaction? They won't answer the question. We don't think that they've got enough information on their own client to be able to proceed. And so we're reporting them to you. Next slide, Jackie. Sometimes clients or associates of clients will report law firms, especially when things have gone wrong in transactions, and the client will try and get back at the law firm by saying they did something for me and they certainly hadn't got a clue where my monies are coming from because they never asked me. As Zoe has said, her team, which is a proactive team as opposed to my reactive team, when they go out looking for compliance with the regulations, if they find serious non-compliance at firms, they will refer work through to my team for a proper investigation to happen, which could lead to a sanction. Sometimes we pick things up in the press, where the press has found things that have potentially gone wrong in transactions and law firms have acted on those transactions. And sometimes we do our own thematic exercises, which may show up problems here and there, which we then look into at individual law firms. Next slide, please, Jackie. So controls and sanctions, the SRA has powers to do both. So controls, we can prevent somebody accessing client monies, we can stop somebody being a manager, we can even stop a firm or an individual doing certain types of work. And our most severe control is we have the power to intervene into a law firm. So if we find severe non-compliance that causes a risk to the public, their clients, the profession, we can actually go in and close the law firm down. It doesn't happen that often. It happens probably 50 to 60 times a year, not in relation to money laundering, but across the board of all 10,000 law firms. And half of those is where a sole practitioner has died and nobody else is looking after the law firm. Next slide, please. In terms of sanctions, we can do lower level advice where we'll make an allegation but only wish to give advice. We can give rebukes. That doesn't sound a lot, but firms have to inform their insurers that they've been given a sanction by their regulator. It makes professional indemnity insurance premiums go up, so it is serious. And we can do fines. For the majority of firms, those fines are quite low level, and we have to send off the more serious stuff to the Solicitors Disciplinary Tribunal, which is SDT there. They can impose higher fines, and they also have the power to suspend solicitors from practice and even strike them off the roll as well, which is the worst thing that can happen to an individual solicitor. Next slide, please. So 3 example cases for you. So one is an experienced conveyancer. She was actually acting for a client who was a solicitor herself of a big London law firm. The client was buying a property of just over £3 million. She was getting a 1.6 million mortgage and funding 1.6 million herself. The conveyancer didn't follow the firm's policies, controls and procedures, which were pretty good. and didn't fill in the client matter risk assessment properly, didn't fill in the firm. It had its own bespoke system, which chucked out a score at the end of the CDD. And had she filled it in properly, the matter would have been referred up to the firm's MLRO, just to give a bit of oversight to the transaction. In the end, because the initial steps weren't done properly, inadequate and ineffective CDD was done. And when we looked into the matter, there was £1 million which was being gifted by her mother, which was coming from somewhere. The mother lived in Malaysia. The money was coming from a family trust elsewhere, and no checks were done on £1 million. Now that £1 million could have been dodgy. In the end, we made the firm do retrospective due diligence, and the money was fine. The money was clean, and there was no problems there, but something could have happened, and the regulations weren't followed, and the individual solicitor ended up with the £2,000 fine herself personally. Next slide, please. The next one is where everything goes wrong at a law firm. So we've got a small LLP with a couple of members. They've got no Regulation 18 risk assessment. They've got no Regulation 19 policies, controls and procedures. They've got a few solicitors working there. There's been no training of any sort. And we then inspected and exemplified individual files where they'd failed to identify politically exposed persons, failed to perform customer due diligence properly, enhanced customer due diligence, failed to check source of funds and wealth, failed to perform ongoing monitoring. And so there was everything that could go wrong, what did go wrong. There was associated breaches of the SRA accounts rules. The individual was referred to the tribunal, and the tribunal imposed conditions that they couldn't manage a law firm. They were suspended from practicing for 9 months, and the tribunal, in a very rare case, in this one, actually made them undertake anti-money laundering training, because it was clear that they had no idea of what they were doing when it came to anti-money laundering. Next slide, please. This is a live case. So they were inspected for AML compliance. The firm has got no Regulation 18 risk assessment, no Regulation 19 policies, controls and procedures. In fact, it didn't have any policies and procedures, which has been a requirement under Regulation 20 of the 2007 regulations. So to have policies and procedures, you've got to have had them for the last 14 years. When asked where they were, they referred us to a dusty office manual on the top shelf, which referred to the upcoming Proceeds of Crime Act 2002 and the Money Laundering Regulations 2003. So it's clear that they hadn't had their eye on the ball in terms of money laundering for probably the last 20 years. And when we did individual checks on files, their understanding of source of funds check was that if it was in a UK bank account, that means the monies are okay. Obviously, from what you've heard so far today, that's wrong. You know, just having it in Barclays or just having it in your Lloyd's bank account, that's not source of funds. You have to go back and say, how did it get there? So it's an ongoing investigation, but we think for the whole non-compliance, it's going to be more serious than a fine of £2,000. So we're probably going to refer the matter to the Solicitors Tribunal. 10 minutes done. Thank you.
All right, thank you. So let's move on to Q&A section. I see that Zoe has already been answering some questions, thank you, in the chat section. I think we have a few more questions for Zoe regarding screening. The first question is, can you please provide some practical guidance for firms that cannot pay for technology to help with sanction checks and KYC checks?
Yeah, I think, Mark, you've covered this one. Did you want to add anything to what you've said in the chat on this one?
Well, just for anybody who hasn't seen the chat, I just answered that on sanctions. Helpfully, HM Treasury put together a consolidated sanctions list if they keep up to date. I kind of referred to it actually my points about technology earlier on. That's a very quick, easy way to just kind of go to that document, Control F your way through it. Slight caveat is that it's important to remember that people might have multiple ways of spelling their names, particularly if you're translating from another script into Roman script. So just kind of checking that and checking multiple spellings and so on to make sure you're not missing anything is probably an important thing to remind yourself there. In terms of doing it's almost strange to consider know your customer in CDD as manual. I think it's the challenge has always been to kind of get people to think about it, doing it using technology, and now we're kind of almost kind of looking back in the other direction. But obviously that's how things have been done for most firms for most of the history of the AML requirements. But the legal sector affinity group guidance, which is hosted on our website, I can put into the chat in about 2 seconds as well, includes a whole list of documents you can look to in terms of kind of identification and verification of an individual. So there's a lot of well-trod routes in terms of doing it manually as well. But I'll quickly just put that link into the chat in about 2 seconds.
I can do it already, Mark. There you go.
Oh, cheers.
Great. I think even without the sort of using a specific electronic check, the benefit of open source information is really valuable in terms of checking people's names and then other things that about the client to see if you were doing manual politically exposed persons checks as well. I think relying on declarations from clients alone is a risk because they're not going to sort of say, you got me, I'm a pepper, I'm a criminal trying to launder money. So I think using those different tools, but very much a way of doing it, and that there are risks associated with both sides. So certainly wouldn't say firms must use electronic providers in this space. And I think I don't mind covering the question from Simon as well, which I think is a really good question about how many files should be subject to an audit. I don't think, jump in Mark if I'm wrong, but I don't think we've been prescriptive in this area in the LSAG guidance. And I think you just need to think about the size and nature of your firm, the risk levels. So some of your riskier areas like conveyancing or commercial work or trust work, do we want to take a closer eye? A practical way that might mean sort of the right use of time would be to set sort of, I'm going to look at this many files per fee earner, whether that be sort of 10 or 20 files per fee earner. And then I will look at a selection more if I identify issues. Might be a sort of practical way of going, but just recording your approach in the document is probably a good starting point. And as I say, maybe doing it dependent on the issues you find. With where you're doing larger volumes of work, you may well need to see a bigger cross section of it. But as I say, we haven't been prescriptive, so long as you set out your rationale, unless there's anything further, Mark, on that one.
No, I mean, risk-based approach is definitely the watchword there. Consider maybe what results of previous independent audits have been. That might be kind of a good starting point to decide what your priorities might be, kind of following up. But yeah, no, obviously taking account of the size and nature of the business is really important, kind of deciding where you're going to put your resources.
All right, thank you to both Mark and Zoe for providing clarifications. We just have one more question that's directed at Christian. So the question says, how do you decide which law firms to investigate on what basis?
Information comes through to the SRA, as I said, from a variety of sources. We receive somewhere in the region of 12,000 reports a year, ranging across the broad spectrum of misconduct that a solicitor could get up to. The ones that have a money laundering aspect to them get funneled through to my team. And so we look at what could be deemed serious misconduct, and we look at effectively we have to take a proportionate view on use of our resources. And but if somebody has reported that a law firm hasn't done something that they should have done under the money laundering regulations, which aren't our rules, it's the law, then normally we will take a look at it. So I'm not sure if the question should have been framed. I don't know whether it was intended for me or for Zoe, about which firms do we decide to check and do compliance visits on, or which firms do we decide to investigate. So basically, I don't pick and choose what comes through to my team. People make reports to the SRA. They go through a triage process to make sure that they are something that we could look into, and then if they get through that triage process and come to the team, then we investigate. And it could be on individual transactions, it could be on overall general compliance at the law firm, it could be multifaceted. It could be to do with AML and other non-AML issues as well. So there could be other breaches of our accounts rules or code of conduct or core principles. But generally, I rely on information being funneled through to me. I don't go out looking for it. Whereas Zoe's team is a proactive team, and I'm sure Zoe is best placed to answer that question.
Yeah, I don't mind jumping in if it's a sort of angle of, as you say, Christian, when would it pass that threshold to if we're looking at it as a team. And I think it's the combination of, is it systemic? So how frequently is the issue occurring, such as a lack of matter risk assessments on files or insufficient customer due diligence, but also, you know, balancing that with the impact. So if it's, you know, I think we're moving away from the concept of technical breaches, aren't we? But if actually, for example, a firm is applying enhanced measures across their files, but they've not done matter risk assessments, what is the impact of that versus a firm that doesn't have matter risk assessments and that has resulted in insufficient customer due diligence? Other practical things we'll look for: have they been told this before? If you've been told as a firm that you need to do an audit and you haven't done one or delayed it, then that is going to be an aggravating factor. And I think for my team, we do get to see the wider picture and the culture at the firm, and are they really trying to do the right thing? The challenge comes where that is good, but on the ground, there are some real concerning files. And so it's really case by case, and we put a lot of thought into those decisions on what is the best tool to use, but hope that gives a flavour of how we make those decisions.
Thank you, Zoe, and also to Christian for your insights. And conscious of the time, if there are I don't think there are any other questions from the audience today. So thank you all to all the speakers, and yeah, thank you. And we will end the session here then.
Thanks, Lily. Thanks all.
Thanks, Lily. Thanks all.
Thank you.
Cheers.
Bye.
Bye-bye.
Bye.
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 Bye.